So David, Tungela was a big winner for the funds in 2022, and we've also written about it several times during the year. And in this annual letter, we mentioned that we've sold the whole position. So it's maybe worth getting your thoughts on why we've sold out of it.
Yeah, I think, Jacques, one of the cornerstones of our investment process is to have the discipline to exit positions when they reach our fair value. And I think with Tungela, we'd ridden a pretty significant position for a lot of the time. A lot of things went for us, certainly on the coal price situation. I think our concern really came from the fact that Transnet were really not performing. We'd had a lot of interactions with Transnet itself, a lot of interactions with people in the industry, and we really felt that the Transnet situation was the one real risk to Tungela, and unfortunately that's proved itself to be the truth. They were even as late as September, October this year still saying they could at least do 60 million tonnes on that coal line. I'm not sure what the final number is for December, but we think it's going to be pretty close to 50 million tonnes. And that's down almost 18% on what they did the previous year. So unfortunately, with a company like Tungela, whose basically all its profits are reliant on Transnet freight moving the coal down to the Richards Bay coal terminal for export. Unfortunately, we just had no confidence that Transnet had got to the bottom or have solved the problems that have been unfortunately embedded in that organization over many, many years. So I think it was a combination of a lack of confidence in Transnet moving the volume, as well as obviously seeing the prices starting to roll off a very high level. We still like the company, but unfortunately Tungela is actually held hostage by Transnet and the ability for them to move coal down that export line. So I think we combined all those factors and we exited. I think we exited in hindsight at pretty good prices, certainly well over 300 Rand after having picked up the 60 Rand dividend as well as the 18 Rand first dividend. So I think once again it's just the ability to have the discipline when prices do hit your targets to exit and not fall in love with the position. So I think that in summary was the reason we exited. We still like the company and we still watch the company very closely, and probably down the line would probably take a position again. But unfortunately the reliance on an external third party where we had very little confidence in them performing was really probably the main reason for our exiting out of the position.
Thanks, Dave. Yeah, I mean, I've certainly personally found when you've had a stock that's worked so well for you, it's easy to fall in love with it, but you need to stick with your discipline and not do that. I mean, maybe moving on to South Africa, I think that's obviously a lot of our positions are still South African based. I mean, I think everyone's talking about this load shedding and fairly consistent stage 6 that we've now got to deal with. What's your thoughts on how that's impacting South Africa and the companies we invest in?
Well, I think, Jacques, similar to Transnet, we've got two SOEs that really are not delivering for the country, and I think unfortunately in both cases you can probably go back to state capture and the capture of these organizations to look for the sort of core reasons why we are where we are, unfortunately. And I think with South African shares at the moment you're left with almost a dichotomy, because certainly the valuation ranges are pretty attractive, but you've got this headwind of continual dealing with an increased level of load shedding, and quite frankly, as we sit right now, there really doesn't seem to be any plan to get the grid back, which is sort of most unfortunate and somewhat concerning. I think having said that, I think South African companies, as we know, are resilient. I think that they've dealt with just so much over the last few years that I think our companies will somewhat adapt to the situation. I think it will come at a slightly increased cost, and I think that cost, certainly in quality businesses, will need to be recovered from the market. So I think, again, it's going to be about specific companies rather than buying the market. I think certain companies with good management teams will deal with this crisis significantly better than other companies. So again, once again, the sort of management differentiator, where we back the management teams that are going to deal with this crisis better than their competitors, is where we would like to position ourselves. But we obviously very interested at the moment and watching very carefully how every company is adapting to the situation. I think under sort of stage 2 or 3, it's obviously been manageable and companies are used to it. But by the time we get to sort of stage 6, The sort of challenges are almost exponentially increased. So I think from here on in, it's about talking to companies and understanding specifically how they're dealing with it. But once again, I think the valuation of South African companies are pretty attractive, and our market is resilient, and our management teams are resilient. So I do think that the good management teams will adapt to this. However, it is concerning that we really don't see any resolution to this. This could be a situation for the next 1 or 2 years until specifically the large sort of solar renewable build will actually be rolled up, particularly by the mining houses. I don't think there's any mining house at the moment that isn't building a very significant solar project. So eventually the grid relief will come from alternatives rather than the fact that Eskom gets its act together.
Yeah, I think for me that's the silver lining here, that things have now gotten so bad that we've discussed in the office, we're seeing a mass response by individuals and corporates now taking things in their own hands, putting big renewables and other projects in. So I'm also hopeful that 12 or 18 months down the line that the demand on Eskom is much less, but that still means you've got a painful 12 months or more to get there.
Yeah, and again, it's going to be very company specific. The companies that have the ability to manage the situation better than most, and hopefully try and recover some of this increased cost that clearly is going to be there. And again, perhaps just means that inflation in South Africa may just stick a little bit more stubbornly high than it otherwise should have, because there's now an increased cost base that you've put on businesses to deal with the situation that will need to be recovered through better pricing.